This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Dairy prices are still rising. We got an increase in dairy prices at the overnight global dairy trade auction from the prior event, but it was a small pullback from prices at last week's Pulse event. Overall prices were up 1.9% in US dollar terms, up 3.6% in New Zealand dollar terms. So a good result. Whole milk powder led the rises with a 3.2% gain, but the main pullbacks were in the cheeses, with cheddar down 3.1% and mozzarella down 6.6%. Skim milk powder rose 0.9% from the prior full event, but was down 1.1% from last week's Pulse event. This is still a good result and will probably encourage some analysts to update their new season payout forecasts, just as B&Z analysts did last week. The possibility of a $10 a kilo payout is still in play after these results. Holding the whole milk powder prices up is the unexpectedly sticky fall in Chinese milk production due to low profitability, and a rather steep and unexpected fall in their whole milk powder inventories. This will underpin whole milk powder demand for a while, and rising New Zealand production will bring a virtuous tone to the party as well. In the US, although the average American voter may have voted negative, they're acting positive in their spending, with the Red Book retail sales growth up 5.1% last week from the same week a year ago. And those sort of gains are what giant Walmart is racking up. Presently, these gains are essentially volume gains. But of course, if the US gets aggressive tariffs, price rises will drive these numbers higher with inflation. US housing starts hit a bump in the road in October, down 3.1% to just over a 1.3 million start annualised rate. But the fall was because construction activity fell sharply in the south due to the hurricanes. Obviously that will recover soon for the same reason. But in the background, it is generally challenging for these house builders because mortgage interest rates are remaining high. Still, sales at a 1.3 million rate is about average for 2024. A big question hangs over the US housing markets, however, both for new and used houses. The incoming administration seems committed to quitting the two big institutions that make the market for 30-year mortgages, Fannie Mae and Freddie Mac. They tried in the last Trump administration and were thwarted by Congress, but they seem more determined this time. If that happens, it'll be an earthquake for housing finance in the US and probably be the demise of their unique long-term fixed rates. September data released yesterday by the US Treasury shows a huge inflow in foreign funds into the US. There was $341 billion of private net inflows for the month and another $57 billion by official government transactions. This is easily the largest monthly inflow ever. For reference, the US federal government deficit averaged $153 billion monthly in the year to September. Canadian CPI inflation was up 2% in October, a blip up from September's 1.9%. Their food prices were up 2.7% within that, rents up 7.3%, but these were offset by much lower energy costs there. And after growing rather well in the April to August months, Malaysian export growth has pulled back in September and October with only modest changes. Malaysian import growth is pulling back too, but this is still expanding at twice the export growth rate. In Hong Kong, the clampdowns on freedom of expression are getting fiercer. It is no longer legal to mention Jimmy Lai, let alone the umbrella freedom protests. And China is moving to make it an offence to operating in financial markets unless pricing is, quote, rational, unquote. In India, they're again battling seasonal air pollution, and it's particularly bad this year, especially in the north. The US Treasury 10-year yield is now just on 4.39% and down 6 basis points from this time yesterday. And the price of gold will start today at $2,623 an ounce, up another $13 from yesterday. But oil prices are little changed, still at $69 a barrel in the US, while the international Brent price is still just on $73 a barrel. And the Kiwi dollar starts today at 59 US cents and up 30 basis points from this time yesterday. But against the Aussie, we're unchanged at 90.5 Australian cents. Against the euro, we're up 20 basis points at 55.8 euro cents. That all means our trade-weighted index starts today at just over 68.6 and up another 10 basis points from yesterday. And the Bitcoin price starts today at $92,318 and up 0.3% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.